Okay, so welcome back to the deep dive. And if you've been with us for the past couple weeks, we've been looking at the Jamaican agricultural market.
That's right.
And specifically, we were looking at the weeks ending March 8th and March 15th of 2025.
Right.
And we saw some pretty interesting trends there.
Yeah, we did.
We noticed that prices were continuing to creep up, but
Yeah, a little bit slower than before.
that's right. They were slowing down a bit.
The average increase was about 1.46% for that first week, and then it slowed down to 0.19 the following week. So
That's right.
still going up,
Yeah.
but not quite as fast.
Right, and the market volatility, which is kind of that measure of how much prices are bouncing around, how quickly they're changing, was still significant, right?
Oh, yeah, definitely started at like 40.93%, and then it eased a little bit to 36.98. So
Yeah.
still pretty bouncy.
Yeah. So it really gave us a sense that the market was still kind of trying to find its footing.
It really did, yeah. I mean, even with those averages moderating a little bit, there was still a ton of movement happening underneath.
Yeah, exactly.
It's definitely setting the stage for what we're seeing in this most recent data.
Right, and that's exactly why we're here today. We've got the new numbers for the week ending March 21st, 2025.
Hot off the presses.
That's right. And our mission is to really dig into what's going on, see what these new price shifts tell us, how that volatility is shaping up, and really identify if there are any new trends emerging in the Jamaican agricultural market.
All right, let's get into it.
So let's get the big picture first. Give us the headline for this week. What's the overall story?
Okay, so the big picture is that we are continuing to see that upward trend in prices,
Okay.
but it's still pretty gentle. It's not a huge jump.
Right.
Across the 58 commodities that we track, we're seeing an average price increase of about 0.94%.
Okay.
So that brings the average market price to $666.98 per kg. And as for that volatility, well, it's actually ticked back up a bit to 38.35%. So those big price swings are definitely still happening.
Yeah, that's still pretty high. So it sounds like we've got some continued upward movement in prices, but the market's still pretty bouncy.
That's a good way to put it.
And you mentioned that there's an overall balance in supply across the market. But when we zoom in on specific commodities, that's where things get really interesting.
That's right. There's always more to the story when you start looking at the individual products.
So let's do that. Let's unpack those commodity-specific stories. What are the biggest changes that we're seeing since our last conversation? Where are we seeing the most dramatic price action?
Okay, well, let's start with the commodities that saw the biggest price jumps, our top gainers this week.
Okay, let's hear it.
And right away, Gungo Peas are grabbing our attention again.
Oh, those Gungo Peas, they just keep climbing.
They do. You'll remember we talked about how much they went up in the past 2 weeks. It was 40.91% and then 60.61%.
Yeah, those were big jumps.
Right. And this week, they've surged again, this time by a whopping 62.73%.
Wow. That's a huge increase 3 weeks in a row now.
It is. It's really quite remarkable, and that brings the average price up to $1,410 per kg.
That's a serious price tag for some Gungo Peas. What on earth is driving this relentless upward pressure?
Well, it's hard to say for sure, but when we look at the regional data, we see some really interesting things.
Okay, wait on this.
Well, in Kingston and Saint Andrew, the price has increased by a massive 104.55%.
Wow.
But get this, in St. James, there's been absolutely no change at all.
That's so strange. Why would there be such a stark difference between regions?
That's the million-dollar question, isn't it? It suggests that there are some very localized factors at play here, things that are impacting either the supply or demand in very specific areas.
Okay, so walk us through some possibilities.
Well, given just how much the price of Gungo Peas has gone up over the past few weeks, the most likely culprit is a shortage in supply.
Okay, that makes sense.
And that huge jump in Kingston and Saint Andrew, combined with no movement in St. James, well, it could point to something very specific happening in the Kingston area, maybe a pest or a disease that's affecting the Gungo pea crops there.
Okay, so like a localized agricultural issue.
Exactly. Or it could be that there's been a sudden spike in demand for Gungo peas in Kingston, maybe because of a local event or a shift in culinary trends that hasn't quite reached St. James yet.
That's fascinating to think that something so localized could have such a big impact on the price.
It really is. It shows you just how interconnected all these different parts of the market are.
So Gungo Peas are definitely the star of the show this week. What other commodities made it to the top of the gainers list?
Okay, so next up we have pumpkin, which saw a pretty significant price increase of 19.68%, bringing the average up to $353.78 per kg.
Okay, not quite as dramatic as the Gungo Peas, but still a healthy increase.
Right, and when we look at the regional data, the biggest upward movements were in Clarendon, St. Catherine, and St. Thomas.
Okay, so a bit more spread out than the Gungo Peas.
Exactly, which might indicate that something a little more widespread is going on here. Perhaps a seasonal uptick in demand.
Okay, so maybe something to do with traditional Jamaican dishes that are popular this time of year.
Could be, or maybe there's been a slight reduction in the overall availability of pumpkin across several key agricultural areas.
Interesting. So a more distributed increase compared to that very concentrated jump we saw with the Gungo Peas.
Yeah, exactly. Different dynamics at play.
Now, you mentioned Plummy tomatoes in our last deep dive because of how volatile they were. What's the latest with them?
Well, they're continuing to climb. They went up 11.89% this week, bringing the average price to $178.77 per kg.
Okay, so they haven't settled down yet.
Not yet. And
Yeah.
similar to pumpkin, we're seeing big increases in Clarendon and St. Catherine.
Okay, so again, that suggests maybe some broader regional factors are at play.
Right. It seems like that volatility we saw earlier is translating into some sustained upward pressure.
So it's not just a quick spike and then a drop, it's more of a steady ascent.
Yeah, that's what it looks like so far.
Now, we also have red sweet pepper and yellow sweet pepper on our top gainers list this week, and they're both showing similar increases in that 9 to 11% range.
That's right. Red sweet pepper is up 11.75% to $1,078.85 per kg, and yellow sweet pepper is up 8.99% to $1,072.50 per kg. So pretty close.
Yeah. Are there any common threads there?
Well, there's definitely some interesting regional stuff going on that might be connected.
Okay, tell me more.
Okay, so with the red sweet peppers, Portland is showing a pretty big increase of 40%. But in Kingston and Saint Andrew, the price actually went down by 4.76%.
Wow, so up in one region, down in another.
Exactly. And with the yellow sweet peppers, it's a very similar story. Portland is up 40%, and Kingston and Saint Andrew is down 13.04%.
That's wild. So
They're-
even though both types of sweet peppers are showing overall gains, there are these regional variations that are kind of going in opposite directions.
Exactly. And it's those regional variations that often give us the most insight into what's really happening in the market.
Right, because it suggests that there might be something very specific affecting the supply or demand for sweet peppers in Portland that's driving those prices up.
Right. And whatever is happening in Kingston and St. Andrew, it's causing the opposite effect. Maybe there's just more supply there, or demand has softened a little bit.
Okay, so it really highlights how complex this all is.
Oh, absolutely.
Even within our gainers category, we've got a mixed bag of stories.
Definitely every commodity has its own unique set of dynamics going on.
Okay, well, we've talked about the big winners this week. Let's switch gears now and talk about the commodities that saw the biggest price drops.
All right, let's dive into the decliners.
Okay, who's leading the pack on that front?
Okay, so Escallion takes the top spot this week with a pretty significant drop of 12.52%. That brings the average price down to $685.13 per kg.
Ouch, that's a sizable decrease.
It is, and when we look at the regions, St. Mary, Clarendon, and Manchester all saw pretty big drops.
Okay, so this one seems a bit more widespread than some of the gainers we were just talking about.
Yeah, that's right. It suggests that there might be an overall increase in the supply of Escallion coming into the market.
Okay, so maybe a really good harvest in some of the key producing areas.
Could be. That's often what leads to these kinds of price adjustments.
Makes sense. What else saw a notable downturn?
Green Cabbage also took a pretty big hit this week. It went down 10.91% and is now sitting at an average price of $396.23 per kg.
Okay, another double-digit drop.
Yeah, and the biggest decreases were concentrated in St. James and St. Elizabeth.
Okay, so similar to Escallion, it seems like there might be a surplus of green cabbage in those specific areas.
Could be. That seems like a reasonable conclusion.
And then we have sweet yam on our list of decliners this week, down 10.6%.
Right.
Now, the interesting thing here is that the only region that's specifically mentioned for this drop is Kingston and Saint Andrew.
That is interesting, isn't it?
Yeah, and it's the exact same percentage decrease, 10.6%.
Huh. So a localized drop in a major consumption center like Kingston and St. Andrew.
Right, exactly. So that makes me think that there might be a temporary oversupply of sweet yam in that specific market? Or maybe there's been a short-term shift in consumer preferences in that area just for this past week?
Yeah, you could be right. It's definitely a possibility.
Okay, and then we also have imported cauliflower seeing a price decrease of 9.6%.
Down to $2,154.71 per kg.
Yeah, and again, that's specifically in Kingston and Saint Andrew.
That's quite a turnaround from the big increase we saw in imported cauliflower last week.
Right, it really highlights how volatile things can be, especially with these goods that are coming from overseas.
Exactly. They're much more susceptible to changes in things like shipping costs, import regulations, and even local demand.
Right, so something could have happened on the supply side or the demand side to cause that rapid shift.
Absolutely. It's a reminder that those global supply chains can be very sensitive to disruptions.
Okay, and finally we have broccoli, which saw a price drop of 8.84%, bringing the average down to $1,600.76 per kg.
Right. And the biggest decreases there were in St. Anne and St. Elizabeth.
Okay, so once again, those regional variations are suggesting that there are some localized supplier-demand dynamics at play.
Exactly. It's rarely ever a simple story, is it?
No, it's not. You really have to dig into the details to understand what's driving these price movements.
And even then, it's not always clear cut.
Okay, so we've looked at the commodities that have gone up in price and those that have gone down. Based on all of this, what are the main risks and opportunities that you see emerging for our listeners?
Well, I think the first thing to highlight is that the market is still very volatile.
Right, we talked about that at the beginning.
Yeah, it's actually ticked up a bit to 38.35%, which is pretty significant.
Yeah, that's definitely something to be mindful of.
It is. It makes it really hard for traders and other stakeholders to make informed decisions because the market is so unpredictable.
Right. You never know which way things are going to swing.
Exactly. And if you're not careful, you could end up losing a lot of money.
So managing risk is key in this kind of environment.
Absolutely. And the fact that we're seeing such different trends, some commodities are going way up while others are going way down, well, that just adds to the uncertainty.
Right. It's not like everything is moving in the same direction.
Exactly. And then on top of that, you have these ongoing supply chain imbalances.
Which we've been talking about all along.
Right. And that just means that even if there's a surplus of something in one region, it might not be easy to get it to another region where there's a shortage.
Right, so those regional variations can really exacerbate the volatility.
They can definitely, and they can create opportunities as well.
Okay, so let's talk about those opportunities then. Where do you see potential bright spots for our listeners?
Well, I think the most obvious opportunity right now is with those Gungo Peas.
Oh yeah, they've been on a tear.
They've gone up 62.73% in just one week, and that's on top of the big gains they've already made. So there's definitely potential for some short-term profit there.
Okay, but it sounds risky too.
Oh, absolutely. Anytime you see prices increasing that rapidly, there's a chance that they could come crashing back down just as quickly.
So timing is everything.
It is. You have to be very careful and watch the market very closely.
Okay. Any other potential opportunities on your radar?
Well, I think the price declines that we're seeing in Escallion, Green Cabbage, and sweet yam could present some interesting value buying opportunities.
Okay, how so?
Well, if those price drops are due to a temporary increase in supply, then there's a chance that prices could rebound in the near future.
So if you buy low now, you could potentially sell high later.
Exactly, but it's important to do your research and make sure that those price drops aren't being driven by something more fundamental, like a shift in consumer demand.
Right, so you don't want to get stuck with a bunch of produce that nobody wants.
Exactly, and given the mixed signals that we're seeing across the market, I think it's wise to diversify your investments.
Okay, so don't put all your eggs in one basket.
Exactly, spread your bets across a variety of commodities. That way you can mitigate some of the risk associated with those big price swings.
That sounds like solid advice. Diversification is almost always a good strategy.
It really is, especially in a market like this.
Okay, well, let's shift gears again and talk a bit more about the supply and demand dynamics. We've got this overall picture of balanced supply, but you've pointed out that there are some pretty significant regional imbalances.
That's right. The total supply of agricultural goods across the island seems to be fairly stable, but when you zoom in on specific regions, you see a different story.
Okay, give us some examples.
Well, for starters, those high prices for sweet peppers in Portland suggest that there's probably a shortage of those commodities in that region.
So not enough supply to meet demand.
Exactly. And then on the flip side, the fact that Escallion prices have dropped so much in Manchester, well, that likely means that there's a good supply there.
Right, and that could create an opportunity to move some of that Escallion to other regions where it's in shorter supply.
Precisely. And then, of course, there's the Gungo Peas situation, which we've already talked about quite a bit.
Yeah, those Gungo Peas are really a story unto themselves.
They are, and the fact that prices have increased so much and so consistently across the island, well, it's a pretty clear indication that there's just not enough supply to meet the current level of demand.
Okay, so it's a real shortage.
It is, and it's affecting everyone.
So the key takeaway here is that those aggregate numbers can sometimes be a bit misleading.
Yeah, they can mask some pretty important variations at the local level.
Right, just because the overall supply is balanced doesn't mean that every region is experiencing smooth sailing.
Absolutely, and I think that's something that traders and consumers alike need to be aware of.
Okay, so as we wrap up here, let's take a look ahead.
Yeah.
What's your perspective on the near-term market outlook based on everything we've discussed?
Well, I think it's safe to say that volatility is going to continue to be a defining feature of the Jamaican agricultural market.
Yeah, it seems like that's the one constant these days.
It does, and with the overall market sentiment being relatively neutral and the total supply seeming to be in balance, well, I think we can expect to see more of the same in the coming weeks.
Okay, so more price swings, more regional variations.
Exactly. Some commodities might continue to climb, especially those where supply is constrained, but others might start to decline if supply outpaces demand.
So it's a mixed bag.
It is, and that means that anyone involved in this market needs to be adaptable, they need to stay informed, and they need to be ready to move quickly.
So agility is key.
It is. And so is risk management. You have to be prepared for those sudden shifts in the market.
Great advice. Okay, so let's do a final recap here. What are the absolute key insights that our listeners should take away from this deep dive?
I think the most important points to remember are that prices are still increasing overall, that volatility remains high, and that we're seeing some really significant price movements in specific commodities.
Right, and those price movements are often driven by very localized factors, so it's important to pay attention to what's happening in different regions.
Exactly. And for those of you who are involved in trading well, diversification is your friend.
Probably spread those risks.
And for everyone else, well, just be aware that the prices of your favorite Jamaican produce might be a little unpredictable for a while.
That's right, so whether you're a trader or consumer or just someone who's interested in how markets work, we hope this deep dive has given you some food for thought.
I hope so.
And on that note, here's a final thought for you to consider. Given this pattern of high volatility that we've been seeing in the Jamaican agricultural market, what are some innovative strategies that stakeholders could implement to mitigate risk and create more stable and predictable prices in the long run?
That's a great question.
It's a challenge that requires some creative thinking, but it's also an opportunity to build a more resilient and reliable agricultural ecosystem.
I agree.
Okay, well, that's all the time we have for today. Thanks for joining us for another deep dive. We'll see you next time.
See you then.